tax experts are challenging the notice issued by the Kenya Revenue Authority, stating that the chairman of the board at KRA has no mandate to issue suspensions on tax reliefs, arguing that it is the job of either the Commissioner General or the commissioners at KRA. Now, KRA in response have clarified that Kenyans who had applied for the tax reliefs before the suspension was put in place will still have their request processed, adding that the suspension is meant to ensure the reliefs are streamlined. Let's get more from our very own Faisal Ahmed.
Questions are being raised as to whether the tax relief suspensions issued by the taxman are anchored in law, with tax experts stating that the board chair has no powers to issue the directives, adding that the powers to implement policy matters such as suspension of tax reliefs fall under the mandate of the Commissioner General, who sits at the helm of KRA.
So here we are seeing a situation whereby the chair of the Kenya Revenue Authority board is the one who has signed that public notice. The board is supposed to only take care of policy issues. Policy framework is meant to guide practice. So the board should not be involved in practice. Practice is the work of the commissioner and his officers.
Okumu further says blanket suspension of reliefs could have far-reaching ramifications to Kenyan exporters who rely on tax breaks to become more competitive in international markets. Some of the affected parties include horticultural exporters.
When you talk of VAT refunds, this is an incentive that was given to exporters. Right now we are talking of horticultural, those who are in the business of horticulture. Most of them are the ones who are exporters. And in order for you to give them that incentive, to make the prices of their products to be competitive outside there, in the auction houses in Europe and all that, at the end of the day, it means that if you say you're not paying them these VAT refunds, you want them to start sourcing for financing.
Some of the tax reliefs that could be affected include foreign tax reliefs, which one could claim if the same taxes they have paid is applicable in a foreign country. Also, every resident individual is entitled to a personal relief of 28,800 shillings per year or 2,400 shillings per month, which took effect in April 25th, 2020. For persons living with disability, the law allows them to apply for exemption from income tax for persons earning less than 150,000 shillings. The Executive Director of the National Council of Persons Living with Disability, Harun Hassan, says that the communique from KRA has caused panic in the community as they seek to understand how they will be affected by the changes.
They are enjoying, this tax relief now to incur other, that relief help them now, to offset other benefits. They enjoy, duty-free car, for example, to make them move around, mobile around, so some benefits. So this statement that came yesterday, it was kind of a shock to millions of persons with disability in the country.
Similarly, economists have faulted the nature of the blanket communication by KRA, stating that it will create anxiety in many sectors.
Should have gone out with more clarity. Number one, which waivers are they suspending? Which reliefs are they suspending? You don't say all and leave it like that, because then all means all. In the nature of the law, because we will not know the context of your board meeting that decided which reliefs when you say all reliefs.
The Kenya Revenue Authority, in a follow-up statement issued today, said that the suspension of the reliefs does not mean that they have been scrapped, further adding that all tax relief applications that were made prior to the suspension would be honoured by the taxman. Faisal Ahmed, Citizen TV.